You're listening to the Infinite Banking Mastery Podcast. Did you know that you could build a tax-free pool of wealth that's liquid and accessible all your life while building your retirement nest egg? Gain full control of your financial future and stop relying on the government and banks. The wealthy have already discovered this wealth-building secret. Now it's your turn to get financially secure without following the conventional wisdom that keeps you in debt to banks. Now here's your host, Valerie LaRocque.
Hello, everybody. Welcome back to the Infinite Banking Mastery Podcast. I hope you all had a fabulous 4th of July holiday. It was super fun. I thought that it was finally on a 3-day weekend. It sure helps when you don't have to get up bright and early the next day to go to work, like I'm sure happens to many of us. Like my husband, he always gets 4th of July off, but then the next day he has to go to work really early too. He has to get up at like 5 a.m. And of course, you're up kind of late on 4th of July, or at least most people are, a lot of people are. And so I think maybe we should have the day after 4th of July off. I think that would be better. So anyhow, a topic that I wanted to touch on that I often come across is, why doesn't everybody know about this, the infinite banking concept? And also, why isn't my current advisor gung-ho about the idea? And a lot of people are hesitant to talk to their advisor, to mention to their advisor that this is what they want to do, or they come upon it slowly, or they try to figure out a way to kind of get around having to talk to them about it. So why isn't that current advisor more on board? Many people I talk to have a financial advisor, and which is generally an advisor who focuses on assets under management, assets in the market, investing in the market. And those advisors, they don't really understand IBC. I would actually say that I believe that most advisors don't know about IBC, most advisors that are focused on investing in the market. And when they hear about it, one of their clients comes up and talks to them about it, they don't seem very excited about the idea. They tend not to like IBC. Though I would say if they hear about it and choose to learn about it, that they are more inclined to be interested in it or try to figure it out. I have an acquaintance who is a financial advisor, like a acquaintance friend. And so I shared a brief overview of the infinite banking concept because I was actually helping him with something else. And so what did he do? Of course, he listened to me. He heard my explanation. He understood more quickly because he's in the industry. And he asked a lot of questions. And I told him I'd be happy to help you with this. But instead, he went out and did it for himself. So I think he felt, okay, I've learned enough. I've heard her speak for 20, 30 minutes on the topic, and it makes sense to me. It seems like a no-brainer type of idea. And so he went out and created the contract for himself. Now, I know he doesn't do life insurance every day. That's not something they are really focused or specialized in, but they do a lot of investing in the market. And so rather than have me, who specializes in this and does it day in and day out, help make sure he does it correctly, he went out and decided to do it for himself. And so the next time I saw him and was talking to him about this, which was probably 4, 5, 6 months or so, he asked me, what happens when you mech your contract? Can you get out of it? And so it sounded like he went and built a contract, caused it to mech right away, and then asked how he could fix that situation. But unfortunately, you cannot backtrack out of a mech contract. Once a mech, always a mech. In fact, I was helping a client recently who wanted to 1035 or move money from an existing life insurance contract that had basically terminated but still had cash inside of it. So it was still covering him for term insurance. That's what will happen when you lapse a contract. If you stop paying and it lapses, but there's cash in there, it will turn into something called extended term insurance. Now, I can't say this happens with every single company, but the companies that I'm aware of and that I work with. So it turned into extended term insurance, which means it will cover for a certain amount of death benefit for a certain amount of time, or that death benefit that you had for a certain amount of time. And then once that money runs out, because it's paying the cost of that death benefit, no longer the cost as whole life, but the cost as term, then it will be truly terminated. So we had this contract that he had some cash in it, and it had terminated at some earlier point, and he wanted to roll that cash over to a new contract. And so I was helping him with that. And what we didn't realize this whole time is that the funds he still had in that older contract that had terminated, that contract had become a MEC contract a long time ago. And so we were issuing the new contract, and they said, "Oh, well, he's going to need to sign this document that says, I understand my contract is a MEC." And I said, "Oh, no, no, we do not want that. Why would we want that?" And so we reversed everything and ended up putting the funds back where they were so that we would not be transferring those funds over and creating a MEC contract, because we do not want the contract to MEC. That's one of the whole reasons we want to specialize a person who specializes in this to make sure that doesn't happen. And so once a MEC, always a MEC. You can't go back out of it. You can't reverse it. You have a small window of time when the company will notify you to reverse it. And otherwise, if it becomes that way and too much time goes by, there's nothing you can do. So, anyhow, if you are working with an advisor and they are not on board with what you're doing, they're wondering why you're doing it, but you've put in all the work to learn, you've read Becoming Your Own Banker, you've read The Case for IBC and maybe some other IBC books, there's other good ones out there, and you've been listening to solid podcasts that have good, sturdy, solid information, or learning from the Nelson Nash Institute, who has some good learning material there as well, then don't let your advisor or your financial advisor talk you out of everything you've learned or talk you out of your learning journey, because this is a powerful concept that can totally change your financial life. I have been a financial advisor for about 20 years and can help people in every possible way in this industry, aside from health insurance or car and home insurance. But of course, if you're in Washington State and you have a need for one of those, I do have great referrals for those for that type of insurance. But this is truly such an incredibly powerful concept, the infinite banking concept, using whole life policies from mutual life insurance companies. It is the most powerful concept that can have the most positive results for your financial future and success that I have ever seen in my 20 years in the business. Keeping your money in motion like banks do and utilizing these sturdy financial vehicles is one of the most, if not the most, powerful thing you can do for your financial future. These other advisors who have a certain way that they run their business and a certain way that they choose to help their clients oftentimes are not open to learning a different way and don't care to bring the asset of life insurance into their clients' portfolios in the same way that we practitioners would want to do it. They've been taught all throughout their careers that life insurance is a bad investment. And really, of course, remember, it is not an investment. And I'm really glad whole life insurance is not an investment, but instead a very solid asset, because we wouldn't want it to be an investment. Investments can lose money, and your whole life insurance policy will not. Whole life insurance sits as tier one capital on the books of many, many banks. It takes a while to learn this well, to learn how to teach the infinite banking concept well. And I think many advisors feel comfortable with how they help their clients already and don't want to bother learning something new. So don't let them derail you when they haven't put in the significant amount of effort that we practitioners have put in. We have put in the hours and hours and months and years of study to learn this well, to be able to teach it well, and will definitely know more about it than an advisor who is just hearing about infinite banking. And of course, as I'm sure most of you already know, they're not going to want you to move any money, to move your money from the accounts that they're managing into a whole life policy with someone else, because their focus is on building assets to manage, not losing them. People often say to me, once they've learned, once they've done what it takes, read the book, had a meeting, they often say, "This is so amazing. Why doesn't everybody know about it? Why isn't everybody doing infinite banking?" And my answer is partly because of the advisors. The advisors are not out there promoting this or talking about it or sharing it. The majority of financial advisors are not. Certainly, it is getting more momentum for sure. But when you're an advisor comfortable with what you're doing, you might be thinking, "Well, I don't need to learn something new. I know what I'm doing to help my clients." It takes an awful lot of learning to be able to teach this well. So, in addition, I'm sure they're thinking, all this learning I have to do, and I will also have to partner with someone to teach me. Because getting a knowledgeable agent in this area to be a mentor and to help the client is the best way to learn. But knowledgeable agents don't work for free. So the advisor might be thinking, to teach this and to learn it well, I'm going to have to do all this study, do all this learning, read books, and listen to podcasts myself. If they want to be a practitioner, they're going to need to reach out to the Nelson Nash Institute, and there's a whole process to becoming an actual practitioner. And so they might be thinking they have to put a lot of effort in, and then they'll have to pay someone to help them with their clients, with their client cases. So then they're going to have to share their earnings on those cases from their own clients. And they might be thinking, I don't think so. I would rather keep all those earnings to myself. Another thought that might be going through their heads is if I decide to teach this, I have to then convince people to read a book and to learn about this and understand it well. Also, you have to teach the client, and that's a whole bunch of work. No one wants to read a book. How am I going to get them to read and learn? And then once I've learned and have successfully gotten my client to learn, after all this work of myself reading the book, getting a mentor, having that mentor and partner help me with my cases, share my earnings, and then after all that, take a pay cut? I have to take a pay cut? Because the way we are structuring these policies pays the agent less than a traditional whole life structure would pay. So I think these are likely some of the deterrents to current advisors in the industry, keeping them from really caring to learn about the strategy and help people in this area. It takes a lot of time, effort, and money to learn, then have to put forth a lot of effort to teach someone else, only to receive a pay cut in the end. That may be what they're focused on or what they realize once they start looking into this and may decide to keep on their same path or help people in the way that they are comfortable helping people. Now, like I said before, I do think this concept is getting a whole lot more momentum in recent years, but have always thought that these could be part of the reasons why more people haven't known about it, why it hasn't been out there and known as just a no-brainer, and why everyone's not doing it, housing money inside of whole life insurance contracts, because advisors out there haven't been jumping on the bandwagon to teach this concept. About 100 years ago, this was the place people held a lot of their savings dollars. But with the excitement of the stock market in the 80s, building wealth inside of whole life contracts sort of fizzled out. But whole life has been around for over 200 years. Walt Disney borrowed against his whole life insurance policy to start Disneyland. J.C. Penney borrowed against his policy to save his company during the Great Depression. So this is not new information. It just seems new. Thankfully, Nelson Nash wrote Becoming Your Own Banker years ago to help bring this concept that's been around for hundreds of years, over 100 years at least, to the masses so the rest of us can know about it. So if you have been putting the work in to learn this and you go to your financial advisor and they tell you it's a bad deal, don't do it, feel free to reach out to me instead. If you're ready to begin this process and need to partner with a knowledgeable advisor to help you get started, I'm here to help you. You can reach me at valerie@alphaomegawealth.com. I will be happy to assist you and work with you. Well, as always, I appreciate you listening. Thank you for listening, and I hope you have a great week.